this once-in-a-decade chance to make a big fat profit. Today we're going to talk about the Chinese government stimulus package, why does it matter to you, and how can we make a big fat profit out of it by understanding what kind of industries would be benefit from this package. If this is the first time you're here, my name is Eric. I've been investing since I was 18 years old for more than 20 years. Yeah, I know I look a bit younger than that, right? But anyway, I invest in all kinds of instruments: stocks, bonds, ETFs, mutual funds, warrants, options, you name it, even watches. In this channel, I want to give you unique insights into Chinese stock listed in the US. With my connection and my understanding of the media, not just the state media, but the media with real insights. Do you want to make money? If the answer is yes, there's a button there called subscribe. Just click it. That's the free and easiest way to encourage us to give you more information in the coming future. How to make a shitload of money out of the Chinese stimulus package. First and foremost, of course, we need to understand what exactly is the Chinese government stimulus package. Second, we need to understand what's the problem with the Chinese economy in the short term and the long term. Third, how to make a shitload of money out of the stimulus package that we foresee will be coming. In particular, what kind of industries should we be looking at? Why did the stock price of Alibaba and NIO and the likes went up in the middle of November after stagnating for some time? That's because the first round of the Chinese government stimulus package came out. Okay, what exactly is the stimulus package? There are four things. First, monetary easing, meaning to reduce the interest rate of the banks that they need to pay to the central bank. That means they have more money to lend out to people and to people doing business. Secondly, they reduce the burden on the property market by reducing the interest rate on mortgages and the likes. The third point is that they finally addressed the hidden debt of the local government, which is extremely important because we are talking about $1.4 trillion, yes, trillion and in dollars, which is crazy. With bond swaps and loans, this hopefully can address the problem a little bit. I'll explain more later. The fourth point is to strengthen the capital market, meaning to make it easier for enterprises to borrow money by having relending facilities and stock collateralization. Anyway, I know it's a lot of jargons, but basically meaning easier to borrow money and invest in the real economy. Well, the share prices of the first stimulus package did go up. Alibaba went up around 4%, NIO went up around 5%. Okay, doesn't sound very exciting, right? Hold on. It even went down afterwards. But that's not the key point. The key point is that the Chinese government, because of legitimacy issues, they need to make sure that the social stability is there. They need to make sure the economy goes up. Meaning, they are going to give an even stronger stimulus package in the coming months, if not weeks. So what are the implications to you and I? Basically, that means that there will be stronger stimulus package and the stock price drop is actually a good thing because we can buy it low now and make a shitload of money. But of course, we need to first understand why the first stimulus package did not work and so that we can understand how we can make money in the next stimulus package by looking at what they are going to come out. The first reason is the scale of the stimulus package is too small. Yes, it sounds like a lot with addressing the hidden debts of local governments with $1.4 trillion. But in comparison of the size of the problem, the estimate is that there's at least $14 trillion and by some estimates, even more. So of course this is not enough. In comparison, Germany, the biggest economy in Europe, the size of the economy is only, quotation mark only, $4.2 trillion per year. So imagine the hidden debts of Chinese local governments is 3 to 4 times of the economy of the country that produces BMW, Mercedes-Benz, Siemens, and the likes. The second point about the scale of the stimulus is too small is about the interest rate reduction by the central banks to the banks, which can release $141 billion. Sounds like a lot, but this is nothing compared with the size of the Chinese economy, which is $19 trillion per year. The second reason why the markets did not respond positively about the stimulus package last time was because they didn't address the main problem of the economy, the imbalance of the economy. Anyone who studies basic economics will know that the macroeconomy is composed of 4 components. First is the net export, second is the government spending, third is investment, and the fourth is the consumption of household. So household consumption. Net export is clear, there's a trade war, but anyway, this is not the main composition, it's a very small proportion of the economy. Secondly, we talk about government spending. Yes, there's an emphasis of more infrastructure spending by the Chinese stimulus package, but most of them, interestingly, are not being counted as government spending. This is also the reason why the hidden debt is so high by the local government, because they use something called the local government financing vehicles. But that's a separate topic. Anyway, government spending is only around 14% of the Chinese economy, so it's also not super important. The main imbalance in the economy that makes the market nervous is because of the last two: fixed capital investment and household consumption. So fixed capital investment is already counting 43% of the Chinese economy. In comparison, in the US, it's only 20%. Yeah, so imagine there's so much so you can build in terms of bridges and train stations. You don't need 30 train stations in the town, right? So this is not getting efficient. So people are a bit worried that now the focus of the last stimulus package is still about building more bridges and more train stations. This is too high and imbalanced. You cannot have 60% of the economy just by building infrastructure, right? Instead, the market is expecting the Chinese government to address the consumption, household consumption. The problem is that now it only counts for 38% of the Chinese economy. In comparison, US household consumption, like, going to supermarkets or, buying stuff for Christmas, this counts for 68% of the US economy. So basically, instead of 40%, it should be 70% of the Chinese economy. However, this is not being addressed. Last but not least, even worse is the consumer confidence. Obviously, consumer confidence is the key to increase consumption. Instead, according to my personal contact in China and also many of the media, the Chinese civil servants got pay cut. Instead, they need to refund the bonus they already accept in the last 5 years or even more. And we are not talking about 10% of your salary. Like 50% of their salary in some cities are their bonus. So imagine you need to refund 50% of your paycheck in the past 5 years. Imagine how good is the consumer confidence. Do you think that you're going to spend a lot of money in Black Friday if you need to refund 50% of your salary in the past 5 years? Of course not. But the stock price went down, but this is exactly the opportunity for us to make a big shitload of money, because the Chinese government, of course, also understood this. So that's why in the next stimulus package, I expect them to address these problems. And there's certain industries that we can pay attention to and make a shitload of money. A number of industries are likely to benefit from the next round of Chinese government stimulus package. First and foremost, obviously, is the real estate and related industries like construction industry. Because real estate, according to some account, is directly and indirectly impacting 40% of the Chinese economy in total. Of course, if they were to address the economy, this is the first industry they need to look at, because this also impacts consumer confidence, because this is where the wealth of the Chinese people lies. So that's why companies' shares of real estate companies, construction companies, or even banks would be benefited from that. And I expect this would go up a lot. The second industry that is likely to benefit from the stimulus package is semiconductor and technology companies. Why? Well, obviously, if you read news, there's a big competition ramping up with the US about semiconductor and technologies. And this is the focus of the Chinese government. They think that this is the competitive edge they will have over the rest of the world. So that's why companies like SMIC or Huarong semiconductor companies are likely to be benefited by state support. So their share price obviously would go up. The next industry that's likely to benefit from the next stimulus package would be consumer goods and retail. As I mentioned before, right, the balance of the economy is to really increase the consumption of household and consumer confidence in general. So obviously the Chinese government would really focus on that. E-commerce companies like Alibaba, JD.com, or PDD kind of companies like Groupon, they will benefit from this revival. Almost forgot, of course, we also need to remember electric vehicle companies like BYD, NIO, XPeng, and the likes, because they account as both technology companies and consumer companies. Obviously, they will go up a lot if the consumer confidence go up. Last but not least, the industry that can be benefit from the next stimulus package would be industry goods and commodities. Obviously, the focus is still on infrastructure projects, right? People who supply this kind of projects, on cement, machinery, or steel, of course, they would benefit as well. So this kind of companies would go up a lot as well, the share price. Do you think that there are other industries that can benefit from the next stimulus package? Let me in the comments below and see who has the most likes, then I will talk about them as well. How do we buy low now and make a shitload of money from the next stimulus package? This time we talk about the industries. In the coming videos, I will talk about the companies that could benefit from the next stimulus package. Do you want to make money? Well, if the answer is yes, you know what to do. In order not to miss out, there's a button there, that's called subscribe button. It's for free and it's easy. Also, it encourages us to make more videos and better videos. See you next time.